You founded a company in 2014. In the last 7 years, NIO has grown from a startup to one of the largest EV makers in China. Looking back at your journey, what motivated you to get into the EV business?
First, in 2012, the air quality in China was really bad. I thought that we needed to do something to start a new business that's good for the environment. Of course, Tesla is a company that I have a lot of respect for. Of course, they've achieved so much, but NIO does not want to be another Tesla. What we want is to build a community that starts off with the car, where the customers can share their joy and grow together. Even though we make a premium smart EV, we want to give users changes in their life that's more than just a car.
Performance, optimism, and fundraising. What NIO has experienced in the stock market lately is far from a smooth ride. Over the past year, its shares have seen a significant decline, plunging over 30 to 50% in the last 52 weeks alone. However, news just broke that NIO has raised a whopping $417 million in a new tech fund. Yet, despite this positive development, conflicting sentiments loom over NIO's future, leaving investors wondering, will this fundraising success be enough to steer NIO back on track? We first need to look at NIO's recent stock performance and its challenges. Over the past year, NIO has encountered a significant downturn in its stock price, with a decline of over 30 to 50% in the last 52 weeks. In the last week alone, it dropped by 4.83%. Year to date, the company is down by 32.19%. However, amidst this decline, there's a glimmer of hope. On February 1st, NIO saw a 1.6% increase in its stock price, closing at $5.71. Despite this positive movement, the overall sentiment regarding NIO's future remains uncertain. Moving on to analyst forecasts, Wall Street analysts are surprisingly bullish on NIO despite the challenges facing the EV market. According to TipRanks, out of 10 analysts analyzed, 6 rate NIO as a buy and 4 as a hold. Additionally, the average price target for NIO is notably high, with forecasts suggesting a potential upside of 90.19% in the coming 12 months, bringing the stock close to $10.86 by February 2025. Even the lowest forecast predicts a 40.11% upside to $8 per share. The highest estimate is even more staggering, projecting a surge of 227.5% to $18.70, surpassing prices not seen since mid-2022. But there's a new catalyst on the horizon for NIO stock. NIO Capital, an investment firm with ties to NIO's CEO, has just announced a substantial new fund worth approximately $417 million. This influx of cash could potentially inject much-needed capital into NIO's operations, offering a glimmer of hope for investors amidst a challenging market environment. The new fund, denominated in yuan, is earmarked for investments in technologies related to new energy vehicles, energy transition, and smart manufacturing industries. While it's not yet confirmed whether NIO will directly benefit from this investment, the alignment of NIO Capital's focus with NIO's core business areas suggests potential connection between the two entities. Despite the recent fundraising success, NIO stock has faced significant headwinds over the past year, grappling with economic and geopolitical challenges. Despite reporting positive delivery statistics in January 2024, NIO's stock performance has decreased. However, the news of NIO Capital's fundraising efforts hasn't yet translated into positive momentum for NIO's shares. Established in 2016, NIO Capital has a track record of successful fundraising and investments, accumulating substantial assets under management. The firm's investments in innovative companies, such as Pony.ai and Contemporary Amperex Technology, or CATL, showcase its commitment to driving technological innovation in the automotive and energy sectors. While NIO Capital operates independently of NIO the automaker, its focus on supporting Chinese EV producers suggests potential benefits for NIO in the future. However, uncertainty remains regarding the specific allocation of the new funds and their impact on NIO's operations. Despite potential optimism surrounding NIO's fundraising success, some investors may cautiously approach NIO stock, given ongoing concerns about China's economy. We recently made a video about this too, so make sure to check it out on our channel. Nevertheless, a significant investment from NIO Capital could potentially signal a turnaround for the struggling EV maker, providing a much-needed boost in a challenging market environment. But hey, before we continue, we want to thank you for watching this far.
There really hasn't been a FOMO feeling in NIO since like January of 2021. This stock, and I remember when it first became public, back, several years prior, it was really your first pure play EV outside of Tesla that you could invest in. And it was a Chinese company, sort of positioned, and it had a lot of like similarities. The cars look kind of like Teslas, a little bit more in the luxury space. It was seen as the Chinese Tesla, and it led to this massive, massive run up that we see. You know, of course, it's also around the pandemic time where a lot of these type of names were doing better, but it's just slowly giving it all back. And we're basically back to where we were in the middle parts of 2020 for this stock. And if you go even further back, it's really to the same place that we were back in 2018 at the very beginning of sort of this 5-year journey.
Now, despite fundraising success, the outlook for China-based electric vehicle manufacturer NIO isn't as rosy as it may seem at first glance. While monthly delivery numbers might initially impress, a deeper analysis reveals concerning trends. InvestorPlace assigns NIO stock a D grade, reflecting a cautious stance on its future prospects. Tesla's recent warning about slower growth in 2024 has sent shockwaves through the EV market, causing a 4.7% decline in NIO stock. This warning underscores the challenges facing Tesla and its competitors like NIO in the increasingly competitive EV landscape. Despite NIO's press releases highlighting positive points, a closer examination of its January 2024 EV delivery update reveals a significant decline compared to the previous month. This decline, coupled with the launch of an ultra-luxurious but expensive electric car called the ET9, raises concerns about NIO's ability to compete effectively in the Chinese EV market. Competition in the EV space is fierce, with NIO facing challenges from both smaller competitors like XPeng and industry giants like BYD, the world's top EV maker in 2023. With BYD and Tesla dominating the market, it's uncertain how NIO will be able to carve out a significant market share. Additionally, sluggish delivery growth compared to competitors like BYD and XPeng further highlights NIO's struggles. Economic factors such as China's ongoing economic recovery and consumer risk aversion will likely impact all EV makers, with smaller players like NIO facing the challenges. But what about the future of NIO? Despite a 30 to 50% decline in share prices over the past year, the Chinese electric vehicle manufacturer holds potential for long-term growth. Unlike its competitors, NIO has carved out a niche in the market's premium segment and introduced innovative strategies like battery as a service, setting itself apart from the crowd. NIO's battery swapping technology allows for quick and convenient battery replacements at its global swap stations, distinguishing it from rivals like Tesla. The company even plans to expand its swap station network and capitalize on licensing opportunities, bolstering its competitive advantage in the EV space. While operational results have been mixed, with rising vehicle sales offset by increasing operating losses, NIO's rapid revenue growth and unique product differentiation strategy warrant attention. However, investors like you should remain cautious, as equity dilution and regulatory uncertainties in China could impact the stock's performance. Despite its attractive valuation compared to US-based EV companies such as Tesla and Rivian Automotive, NIO's discounted stock price may not fully reflect its potential due to regulatory and geopolitical factors. Therefore, we advise you to stay informed and vigilant, monitoring NIO's progress closely before making investment decisions. As you contemplate the future of NIO and its place in the EV market, the question now is, do you think NIO is a buy, a hold, or a sell? Join the conversation in the comments below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more about how NIO is trading through China's rough economic landscape, I highly recommend watching this amazing video. Simply click this video right here. Thank you for tuning in and stay tuned for more exciting content in the future.